Why did gold suddenly smash past $3,350 an ounce and grab headlines worldwide? Well, the answer lies in just a few words spoken by the Federal Reserve Chair Jerome Powell at Jackson Hole Symposium. In this video, we're going to explain why Powell's comments made the gold surge, how markets reacted across stocks, bonds, and the US dollar, and what could it mean for gold prices in the coming weeks. So if you are an investor, trader, or just someone who's curious about how central bank policies could affect your money, then this video is just for you. So without further ado, let's get right into the video. Powell spoke at the annual Jackson Hole Economic Symposium, one of the most closely watched events in global finance. This is the stage where most central bankers typically hint at big policy changes, and this year was no different. In his remarks, Powell mentioned the US economy as being caught in a curious balance. On one hand, hiring is slowing, more people are looking for jobs, which means that the labor market is cooling down. And on the other hand, inflation remains a big concern. Powell also mentioned that if a slowdown in jobs became more serious, it could definitely justify a big policy change. What caught everyone's attention was his line that the current situation might warrant our policy stance. That phrase was seen as Powell opening the door for a new rate cut in September, something that the markets were already hoping for. The reaction in financial markets was immediate. Traders quickly raised their bet that FED would cut interest rates in its September meeting. The reaction in financial markets was immediate. Traders quickly raised their bet that the FED would cut interest rates in its September meeting. Before Powell spoke, the odds of a rate cut were around 75%. But after his speech, the expectations jumped to 85% or higher, signaling that the markets are almost convinced that a rate cut is coming. US stock market loved the news. The Dow Jones, S&P 500, and Nasdaq all rallied, with the Dow even reaching record highs. Lower interest rates usually make stocks more attractive as borrowing becomes more cheaper, and it typically supports company profits and investments. At the same time, the US Treasury yields fell, meaning investors were buying government bonds. The dollar weakened too because falling interest rates reduced the demand for currency. Now comes the most interesting part. This is where gold comes in. A weaker dollar makes gold cheaper for overseas buyers, while falling interest rates make gold more attractive for buyers since it doesn't pay interest. Combine these factors and gold surged past $3,350, catching the world's attention. Spot gold jumped to $3,373 per ounce. After Powell's speech, spot gold prices surged by about 1.1%, reaching around $3,373. This quick rise showed how sensitive gold is to central bank signals. Investors immediately shifted money into gold as soon as Powell hinted at easier policy. The speed of this move underlined how markets are anticipating a softer FED stance. Gold futures climbed near $3,418. Future markets also saw strong buying, with contracts rising close to $3,418. Futures are often used by big traders and hedge funds, so this signals strong institutional interest. The jump in futures suggested traders are preparing for more upside. It showed confidence that gold could keep rising in the short term. Resistance and support levels matter now. Traders see support near $3,300, while resistance is lined up at $3,374, $3,400, and $3,452. These numbers act like psychological checkpoints in the market. Once prices break through a resistance, momentum often carries them higher. That's why many investors are watching $3,400 and $3,452 closely. Momentum could push towards record highs. If the rally continues, gold could challenge the all-time high near $3,500. This depends heavily on whether the FED follows through with a September rate cut. A clear move by the FED could give gold the boost it needs to test new records. Traders are positioning themselves ahead of this possibility. To understand why gold moves this way, let's break it down in simple terms. First, we know that gold is considered a safe haven asset, which means that people buy it when they're uncertain about the future. But unlike bonds or bank deposits, gold doesn't pay interest. So when interest rates are higher, investors prefer putting their money into bonds, savings, or other interest-earning assets. But when rates fall, those options become less attractive and gold suddenly becomes the star of the show. Upcoming US jobs report. The next payroll and unemployment reports will be critical for the FED's decision. If hiring slows further or unemployment rises, Powell will feel pressure to act. Weak jobs data strengthens the case for a rate cut in September. For gold, weaker labor market numbers usually translate into stronger prices. Inflation readings remain key. Even though Powell is worried about jobs, inflation is still part of the equation. If inflation keeps cooling, the FED will be more comfortable cutting rates. But if prices rise faster than expected, the FED may delay or limit cuts. Gold usually benefits more when inflation is stable and rates are falling. The FED meeting on September 16 and 17. This is the event everyone is waiting for. Markets are currently pricing in a 25 basis point cut, but some think a bigger move is possible if data worsens. Any decision at this meeting will have an immediate effect on gold. Traders around the world will be glued to the FED's announcement. Gold's next price targets. On the technical side, gold's next targets are $3,400, $3,452, and $3,500 possibly. Each level matters because breaking through could trigger more buying. If the FED cuts rates, reaching these levels become very likely. But if Powell holds back, gold could slide back towards $3,300 support zone. So to wrap it up, gold prices have soared past $3,350 after Powell's speech at Jackson Hole Symposium hinted about possible rate cuts in September. Markets responded immediately, stocks rose, bond yields fell, the dollar weakened, and gold became the star of the day. This shows how powerful can central bank communication be. A few words from the FED chair can shift global markets and push the gold prices hundreds of dollars higher. But the next big question for investors is, will the FED follow through in September? If they do, gold may have more room to climb, but if not, we could see some pullback. But what are your thoughts about it? Let me know in the comments down below. So this brings us to the end of this video. I hope you found this video helpful, and if you do, make sure to give it a big thumbs up and subscribe to my channel for more financial insights. Until next time, take care.